What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we had a very bullish day. The S&P 500 and the Dow Jones are getting very close to forming brand new all-time highs, and the Nasdaq 100 could have potentially put in a bottom and getting ready to go back into a bull rally. We got a lot to cover tonight, and first we're going to look at the Nasdaq 100 NDX. So let's crack open this chart and see what's going on in the stock market today. Alright, so we're starting with the NDX instead of the triple Qs because the triple Qs did pay out that dividend and we get slightly better price action to look at with the NDX. So the biggest thing to note today is that we did get a very bullish day, and if you're looking on a daily chart, you can see that the last 2 days in a row on the triple Qs, we had big buyers stepping in off major support levels. Down here around 12,600 is about equivalent of the triple Qs level at 307.60, and we saw huge buyers stepping in at that level. Then again today, when we retested the support level right around 12,789, we saw huge buyers stepping in, and we closed all the way up at resistance, which is the 50 EMA. Now remember, to get bullish on this chart, we still need to start closing back above the 50 EMA, so we're not quite yet getting the bullish confirmation price action, but we're going in the right direction. Remember that it's possible we finished out this ABC correction and we're getting ready to go back into an impulsive wave 3, which would bring the triple Qs to possible new all-time highs. Remember that we already had a major tech correction, so it's very easy to look at that in recency bias and just assume that we're going back into a correction. But typically speaking, in the stock market, after a correction, we go back to the higher degree trend and we continue that trend. If you go to the higher degree, you would see that we're still in a bull market. So switching this over to a weekly chart, you could see this week that we did close back above the 20 simple moving average. Even though we did have a very volatile week, we closed above that level and we're still maintaining a bullish trend. All of the moving averages are still stacked to the bull side, and you can see in this wedge that we're running out of time before we have to break to the upside or the downside. So this chart takes us out to about 2 more weeks before we get a decisive break, so I'm looking for some very critical price action going into the next week. We're either going to break to the upside or the downside, and that will define if we're going to remain in a bull market or if we're going to start shifting into a bear market. Now don't forget, the S&P 500 and the Dow Jones also had very bullish days today, and they're getting very close to knocking on brand new all-time highs. So it's more than likely that the Nasdaq 100 is going to join the bull rally and continue to go higher as well, but we need to wait for the confirmation breakout. Remember, I'm calling this the chop zone, and if you're trading this market, don't get whipsawed. Try to stay on the bull side of the trade or the bear side of the trade and master your entries and exits. So jumping over to the triple Qs, I want to spend some time in the 5-minute chart real quick, and you could see today that we did have a very choppy day before we ultimately had that rally at the end of the day. The reason I say that if you're trading long or trading short, just stick to a plan is because we were stuck between this nice trading range, which was stuck between about 311 and 313. We had bull trades and bear trades alike all day long, and it did look like we started to get that breakdown at the end of the day. That's why it's important to know your critical support levels, and that 310 level was a very critical support. So on a 5-minute chart, you don't get accurate readings, and it did look like we were starting to break down, and then we had huge buyers stepping in, which caused the bear short squeeze, and the rest is history, and we closed all the way up below resistance at 316. So this is a very choppy market, and that's why I'm calling it the chop zone between 307 and 324. Stick to what you do best. If you do better trading as a bull, then trade as a bull. And if you do better trading as a bear, then trade as a bear. If you keep getting whipsawed and you keep switching between bear and bull trades, you're more than likely always going to be on the wrong side of the trade. It's okay to be wrong on a trade. You just have to win more than you lose and you'll still be profitable. Remember, on the weekly and monthly charts, we're still in a bull trend. So it's a little easier to have a bullish bias in your trading, because the market's general direction is usually going to be to the higher degree trend, which is still bullish. So have a more macro level view of the market and take trades accordingly. Or if you're not trading this chop well, just sit on the sidelines and wait for the trend to return back to the daily chart. So going back to this daily chart, you can see that we did close back above all of the moving averages except for the 50 EMA, which is right around 316. Remember, the most critical level for the bulls to hold up above is this 307.60 level, and ever since we bounced off that level, we never looked back. The most critical level for the bears is going to be right around 324. Remember, I'm labeling this market full bull over 324 and full bear below 307. So right now we're still stuck between 307 and 324, which is going to remain a chop zone. If I'm correct about this being a correction wave complete ABC and that's over with, then we're more than likely going to continue into a impulsive wave 3. So what I'm looking for in a possible bull market scenario is that we've already completed wave 1 and 2 and we're going into impulsive wave 3. Impulsive wave 3 can take us up to about 334 or possibly even all-time highs, but even if we get rejected at 334, we can still pull back to a wave 4 and complete a wave 5 that takes us to brand new all-time highs. So the outlook for the triple Qs going into April and quarter 2 is still somewhat of a bullish outlook. We still don't have bullish trending and we still don't have the confirmation bull breakout. But if you want to take on risk, the more risk you're willing to take on at these lower prices, the more reward you're potentially going to get if we do run up to all-time highs. So you know that your risk is set below closes below 310 and 307. So if you're buying at those levels, you know your risk is below those levels and you know your potential reward is much higher, possibly in all-time high territory. So remember, you can't make money in the stock market if you never take on risk. By definition, every time you buy in the market, you're taking on risk. There's always a possibility that that trade could go against you, whether it's a long trade or a short trade. You're always taking on risk when you buy in. So if you're too scared to take on risk, then just don't chase the market later when it's at all-time highs. That's how you're going to get whipsawed and always be on the wrong side of the trade. Get in the habit of buying low and understand where these strong support levels are and understand your risk management strategy is below those levels. So right now, it's not really the bears winning or the bulls winning. We're still in a chop zone, and whether you're a bear or a bull, you're still likely making money in this market because it's chopping around in such crazy drastic directions. You're making money one moment in a long trade, and then the bear is making money in the short trade right afterward. The market is going to remain choppy, so don't get greedy. Either buy at your support levels and sell at resistance, or short at resistance and cover at support. Don't get greedy and don't try to hold those trades too long. So as you could tell from the moving averages, there's still no decisive trend. We're still chopping around and going sideways, and we don't have all the moving averages stacked to the bull side or the bear side. So right now we're watching for upside resistance at 316 and that 324 level, and downside support is still going to be 310 and 307.60. The battlegrounds level is right around 313, and the longer we could stay above 313, the higher the bullish probabilities become. The longer we stay below 313, the higher the bearish probabilities come. Right now, 313 is a support level because we did close above it, but you can see that we've been chopping around 313, going up and down through that level nonstop. So I'm calling 313 the battlegrounds level for the triple Qs, and if you're on the Stocks Channel Discord, you should be well acquainted with that level because it's constantly coming up in our intraday trading. So this market will start looking bullish if we can start getting closes back above the 50 EMA and start developing some bullish trending. We're full bull above 324, and we're going to start looking bearish if we close below 310 and start developing bearish trending. And remember, we're fully bear below 307. So if you're not sure what to do, wait for a decisive break below 307 to get bearish, or wait for a decisive break above 324 to get bullish. You're not going to get the best entry when you wait for those levels, but at least you're going to have more clarity on which direction the trend is in, and you can stay on the right side of the trade because the trend is your friend. So right now, without a decisive trend, you need to be very disciplined in your trading, and you need to make sure that you have a very solid trade strategy and you're sticking to it. Next up is the S&P 500 SPY ETF, and we saw SPY going up 1.61% today. We did blast right through that resistance level at 394, which is a very bullish indication. We are seeing bullish trending coming back to SPY, with all of these moving averages still stacked to the bull side, and they're all positively sloping. We're just a stick throw away from hitting the previous all-time high at 397. And remember, if we break above 397, the next price target we're watching is up here at 404. So we have bullish trending and we have bullish price action. So I'm favoring the S&P 500 to start breaking through this level at 397 and start marching up towards 404. Downside support levels are now going to be 394 and the 20 simple moving average, which is going to be right around 390. So the bulls are developing a lot of support levels, and the trend is now biased to the bullish direction, which is going to help push the price action higher. On the Dow Jones, we closed right at resistance, which is right at the previous all-time high at 330. This is very bullish price action because we're above all of the moving averages. All of the moving averages are stacked to the bull side, and they're all positively sloping, so we're picking up bullish momentum. It looks like the Dow Jones should have no trouble blasting through resistance and getting up to our price target at 336. Remember that 336 is our price target as long as we're in a bull trend with bullish price action, which we absolutely are. Downside support levels are 327 and the 20 simple moving average right around 323. In order to get bearish on the Dow Jones, we would need to close below the 20 simple at 323. And as you can see, last time we tested that level, it did act as a strong support level. That is a bullish indication that the Dow Jones wanted to go higher. And as we saw, we did get a higher close today. Next up is the Russell 2000, and we see the Russell going up 1.82% today and going back above the 50 EMA and getting a nice bullish price action close. We're still below the 20 simple moving average and the 13 EMA, So we still don't have a fully bullish price action confirmation. There's no decisive trend, and the Russell is still going to be choppy, and it could still go in either direction. Remember, the small caps got really extended on the monthly chart, and it's actually still possible the Russell could continue to go into a correction while the rest of the stock market goes higher. So I'm not bullish on the Russell 2000, but it is starting to do what it needs to do to get back up into a bull trend. We got to close above resistance at 218, and that level should now be support. If we break back below 218, we're still looking for support down here at 205. Upside resistance is going to be 222 and the 20 simple moving average, which is right around 224. On the Arkk ETF, we went down 0.39% today, and we're still getting bearish price action with a bearish trend. We are finding support at the support trend line right around 113, and if that level does break down, we're likely going to the next support level lower at 105. Upside resistance is still going to be 117 and the 20 simple moving average at 122. Remember, Arkk needs to get all the way back above the 50 EMA, which is now at 129, to even consider getting bullish on the Arkk ETFs again. So right now, you're still better off remaining an Arkk bear, but it does look like we could be coming into some strong support, and that is going to be the first step in the right direction to getting this bearish trend reversed. But right now, we're still fully in a strong bear trend, and all of the price action is still bearish on the Arkk ETF. On the VIX, which is our fear indicator, we continue to get the most bullish indication of all. Remember, I've been saying this for a while now. As long as the VIX keeps closing below 20, we're getting more and more bullish on this market. The VIX is an indication of fear, and if fear continues to head lower, that's going to favor the bullish probabilities and the likelihood that we go to all-time highs. If there's no fear in the market, that means the market is slowly just going to continue to melt up, and more people are going to eventually buy into this market, driving it higher and higher. So right now, look for the VIX to close the gap that we had before the March 2020 crash, which is still at 18.2. As long as the VIX is below 20, I'm bullish on the stock market. That doesn't mean the stock market has to go up each and every single day, but it means in the grand scheme of the market, we're likely to continue to slowly drift higher to new all-time highs. Remember, we would need to break above resistance at 21.6 and get all the way back up to about 24.8 before we would consider another correction in this market. We're not quite there yet, and if anything, the VIX is just showing that it wants to go lower. On gold, we're still trading sideways, and it looks like we're stuck in a sideways range between the support level at 1686 and the price target at 1761. On silver, we're still hanging up around support at 25, and if we break down, we're going to the next support level lower at 23.5. Upside resistance is going to be the 50 EMA at 26. On Bitcoin, we're currently up about 6.5%, and we're retesting this resistance level at 55,000. We did get a confirmation bounce off 50,000, which was the 50 EMA, but if we failed to break out above resistance and break down below support, we could still easily see that Bitcoin crash going down over 20 to 50%. So right now, I'm still saying that Bitcoin has far too much downside risk for the potential upside reward. If we can break back above 55,000 resistance, we could still go back up to the price target at 62,500. But right now, I think the downside risk is way too high for the potential little bit of upside reward. On Amazon, we were pretty flat today, only going up 0.19%, but we did hold up above support at 30.33. The next support level below there is going to be right around 29.50. Upside resistance is going to be 30.66, 30.92, and the 50 EMA is now at 31.38. On Tesla stock, we closed right on top of support, right at $618. Right now, we still have bearish price action, and we still have a bearish trend on Tesla, so we're still going to remain a Tesla bear. If we break down below 618, the next support level is all the way down here around 550. Remember that Tesla needs to start breaking back above the 50 EMA, which is now sitting right around $698. We would then want to see a confirmation daily higher high close above 718. So Tesla still has a lot of work to do to get back to being in a bull market, and right now I wouldn't be overly bullish on Tesla until we get the price action and the trend going back to bullish. On Apple stock, we went up about 0.5% today, and we did hold up above support yet again at 120. We're still going sideways, and we're still chopping around this level at 120, and we still need to get back above the resistance at 123 and the 50 EMA at 125 before we can start looking bullish. Apple is holding up above support, which is a great sign, and the longer Apple can hold this 120 level, the more of a base and foundation the bulls can build off of and start driving the price higher. Remember, Apple is a market-moving stock, so if it can start going back into a bull run, it's going to help the S&P 500 and the Nasdaq 100 go to new all-time highs. If support breaks down at 120, the next support level below is at 116. On the financial sector, we went up 1.57% today, and we're back to looking bullish above all of the moving averages. We're slowly but surely developing some bullish trending, and the financial sector does look like it could be getting ready to go back into a bull run. On the industrials, we went up a whopping 1.73% today and closing at a new all-time high. You can see that we never broke the bullish trend and we're only strengthening that trend with today's price action. The price action is still closing above all the moving averages and the industrials are looking very bullish. On the energy sector, we went up 2.48% and we do look like we're starting to bounce and starting to try to get back above that 20 simple moving average. We don't have a bull trend anymore, but if the price action could get back above the 20 simple and start heading higher and breaking out above resistance, we could get a bullish rally again on the energy sector. On the healthcare sector, we finally saw that bullish price action day going up 1.89%. We did see that bullish trending building up, and now we see the price action confirming the bullish trend with this huge break to the upside. So it does look like the healthcare sector is going back into a bull market with all of the moving averages getting ready to get stacked to the bull side. We still need that 20 simple moving average to cross back above the 50 EMA to confirm the bullish trend. So going back to the S&P 500, you can still see a lot of bullish indications. A lot of the sectors in this market are still in bullish trending and still confirming bullish price action. The VIX, which is that fear indicator, continues to close lower, which means we're likely to continue to go higher in this market on a lower fear environment. This is still very much a bull market, even though we are still seeing weakness in the tech sector, but that could be turning around and we could be seeing the tech sector going back into a bull market. Remember that the price target on the S&P 500 is up there at 404, but we still need to break through that previous all-time high at 397 on the way there. So right now, I'm definitely thinking the bulls are taking over this market slowly but surely. It's still going to be a choppy market and we're still going to see volatility from time to time. But remember, if you zoom out and you look at the bigger picture, the stock market is overall still bullish. And while it is being choppier and more volatile, it does want to go higher. So watch the VIX very closely and always pay attention to what the sectors are doing. If the sectors continue to show us bullish price action and bullish trending, the bias is going to be to the upside in the broad stock market move. There's still a lot of heavy growth stocks and we definitely see Arkk ETF getting destroyed, but just stay out of those stocks and focus on the stocks that are ready to go higher. Stick to the blue chip tech companies and stick to the companies in the industrials that are doing very well. Don't forget, on the Stocks Channel Discord, I'm doing intraday updates on the market and I'm bringing you brand new trade ideas weekly. If you're interested in the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. Next up, let's do a quick update on our trade idea, which is still Shopify. We see Shopify got to our last buy target down here at 1035 and we did intraday go lower, but we closed higher for the day at 1065. If you can get in at this level, this is going to be the best risk reward trade. Upside price targets are now going to be 1080, 1111, and 1133. If we can break above 1133, we still have all of these price targets for Shopify to meet. So we're going to continue to watch Shopify unless we get closes below our last buy target at 1035. So this could have been a great risk reward entry and we did see a lot of buying volume stepping in today on this move. So happy Friday everybody, I hope you have a great weekend and don't forget to look for my macro level analysis video that'll be coming out on Sunday. And as always, I will see you in the next episode.